Hello everyone. Last year, American Central Bank Federal Reserve announced that it is going to reduce its bond buying program and reduce its quantitative easing measures that it implemented to revive the economy which was paralyzed by the COVID pandemic. But it did not result in real economic growth. It only boosted financial speculation and financialization, and overall all over the world the stock stock market levels have skyrocketed and reached historically high levels. And since the announcement, the foreign investors has turned very cautious and prudent, and they've been shifting their investment to safer assets, and they've been pulling out of investments from emerging markets like India to a large extent. The panic selling has been increased recently because the Federal Reserve is going to increase its interest rate from March. So the panic selling has been increased. So in the February, more than 35,000 crore has been taken out from India in FPI. India's stock exchange, National Stock Exchange Nifty index is 52 weeks high value is it is 18,604. It reached that high, and it is come down by more than 10%. It reached its first level correction. When it comes down by 10%, it is called a first level correction. So today's Nifty value is around 16,580, and also the Bombay Stock Exchange BSE Sensex also come down more than 10%, reached its first level correction. So it is going to go down. It's going to fall down further in March and April. So people have been looking forward this as an opportunity to buy stocks and other things as low prices, so that they can accumulate stocks and wealth in this form. So DPAT, that is Department for Promotion of Industry and Internal Trade, released data about foreign investment in India. So the foreign direct investment come down comparing to last year. Last year it was around $67.5 billion. This year it has been reduced by to $60.334 billion. And during April-December period also, the foreign direct investment was reduced by more than 16%. And in equity inflows also reduced from more than 50%, that is from $21.46 billion, it has come down to $12 billion this year. So Singapore remains the largest investor in FDI investor in India. So it invested around $11.7 billion. Next is next to Singapore is United States. It invested around $7.5 billion. And next comes Mauritius and Cayman Islands and Netherlands. So, and United Kingdom. All these countries invested more than $1 billion in India. So all these countries are secrecy jurisdiction. That means Tax Justice Network defined this. What a secrecy jurisdiction is. They provide specialized services to enable individuals and corporations to evade rule of law and hide wealth. So they have all the infrastructure. So all this has been called as the secrecy jurisdiction. So I had to ask one thing, like do you call it a revenue if you sell out your kidney and the money you get out of it. Do you call it revenue? But neoliberal economy says that it is revenue. The money collected out of privatizing state corporate public sector enterprises and disinvestment has been called as revenue, and it has been termed as non-debt capital receipts. And India set a target of rising around 1.88 lakh crore for 2020-21 financial year, but it has been able to collect only 15% of it. So it in the revised estimate it reduced it to around 8 it reduced it to around 80 78,000 crore. So out of which 65,000 crore it is planning to get from selling its state stack, 5% state stack in LIC via IPO, initial public offering, despite severe opposition from people and opposition parties. And 20% FDI is in automatic route is also approved by the cabinet. But yesterday, our finance minister announced that they are going to postpone LIC IPO because of this Russia-Ukraine war. So that means the disinvestment and the IPO goes to next year, because up to this March it is the 2021-22 financial year. So if it is in April, that comes in next financial year. So the fiscal deficit target, so it might go a little up because of the postponement. And because after economic reforms, India is more become dependent on India enable more permitted to a large extent of foreign investment, both in direct route and in portfolio route, and India become more dependent on the foreign inflows for its so because of that there is a it is going to the rupee may weaken because of the reducing inflows, and there is inflation is also getting higher, and there is also energy prices. There is a surge in energy prices, and the declining foreign exchange reserves and the increasing inflation. All these are threatening, and it poses problem to the Indian rupee, and it might increase our trade deficit, and it might bring in BOP balance of payment problem. Thank you so much for watching.